Hello, and welcome to another episode of the Real Estate Investing Club, the place investors go to learn tips, tricks, and stories from other investors in the field. If you feel we provide value to you, go ahead and hit that thumbs up, share whatever it may be, and if you'd like for us to cover a specific topic, let us know in the comments or reach out to us through our website. Today we have a very special guest, so buckle up, grab your pen and paper, and enjoy the ride. Right, and we are live. Jim, thank you for joining us today. How are you doing?
Oh, I'm living the dream, and the dream lives on every day. I couldn't be any better. Thanks.
Perfect. Thank you for joining us today on our episode. To get us started, why don't you just tell everybody, who you are, where you're from, and a little bit about your background in real estate, how you got started in real estate.
Well, we have very limited time, and I'm a man of many stories. But my name is Jim Freeman, and I'm a real estate broker and an investor in a little community west of Seattle. It's called Port Orchard, Washington, Kitsap County. And my real estate career as such began all the way back in 1975. So I've been through at least 4, now maybe 5 coming real estate recessions. And I started while I was still a student at the University of Washington, living in a student ghetto. And it's a better story if I had more time to tell it. But when I was still going to school, I had a part-time job. I had a scholarship to go to school, pay my tuition.
Okay.
But I had to earn enough money to buy beer and pay rent.
Yeah, of course.
And I, went to work for this guy who was a Vietnam veteran. He just got back from Vietnam, and he was buying the great number of foreclosure properties that were available in Seattle in 1975. And I worked with him a little bit, and I learned sort of some trade skills from him. I bought a duplex in 1975 on Queen Anne Hill on Garfield Street.
How much did you buy it for? Queen Anne, that is some prime property up there. 1975, what would you buy it for?
1975, I paid, if I remember right, it was around $21,000.
Oh man, that's guaranteed. That's worth at least $1.5 million at this point.
Yeah, I wish I still owned it, but I don't. But to kind of carry on with the story, it was vacant in a wreck. The guy that owned it was a doctor. He paid all the closing costs, commissions, everything. And he gave me the excess funds in the escrow account for real estate taxes and insurance, which gave me some little money to make the payment for a couple of months, some money to fix the place up. I would go to school in the morning. I'd work for my friend Gary in the afternoon, and in the evenings I'd spend, fixing up the one unit, sleeping in the dust, and getting up and doing the next day. And I, within a month I got a tenant, which paid the payment and gave me $100 a month cash flow. And to sort of cut into the story, 3 years later, I built my first 27-unit condominium on North 35th Street in Fremont. And I did one of those every year for the next 4 or 5 years until I went broke. And that was the second real estate recession. It was in the early 1980s. Jimmy Carter inflation years. Interest rates approached 23% for home mortgages that year.
Wow, that is insane.
Mm-hmm.
All right, so that is a great intro story. So 1975, you started, your first duplex out in Queen Anne. For those who are not familiar, Queen Anne is probably one of the best areas in Seattle. You got it for $20,000. You helped fix
no
that.
No money down. They gave me the money to make payments for a couple of months.
Yeah, there you go. No money down, $20,000. One of the best areas in Seattle, probably worth a couple million at this point. And then from there, you went on to building condos. You said 27 units, so very large condo complexes. And you did that for a number of years until the next recession hit, and that kind of wiped you out. Does that summarize the beginning of the
journey? Yeah, it was ambition over sense. So my objective in those days was to beat Howard S. Wright. I wanted to be a bigger builder than Howard S. Wright. starting from nothing. And
I like it.
I think they won, but anyway, I gave it. I swung the bat. I swung for the fences and ended up in a bad place. But sometimes bad things happen, so good things can happen.
Absolutely.
And the next part of the story was I had to get my first job. Well, I had a construction company, and I was developing real estate, and I was acquiring partners in general partnerships. That's how I developed all those properties. And but my lender at that time was a company called Seafirst Mortgage Corporation, which today is Bank of America. You're probably too young to remember the name Seafirst, but yep. I was hired by Seafirst Corporation, Seafirst Mortgage Corporation. The bank was in receivership. It had lost $1 billion in core capital, lending money to wildcatters in Oklahoma. And they were under the supervision of the Office of the Comptroller of the Currency and being involved in a forced merger with Bank of America. And the mortgage company held a lot of bank-owned properties and, defaulted loans and all kinds of stuff. And the president of that company, Bill Jennings, called me up one day and said, Jim, I understand you may be looking for something to do. I said, you're damn right, Bill. I don't have 50 cents to buy another can of beans. What do you got? And he, much to my surprise, he wanted to hire me to work as what was called a special credits officer for the mortgage company. And that job entailed, managing defaulted debt, trying to collect it. And so that was the first job that I had as an adult. And one of my partners, the wife of one of my partners, was kind enough to take me down to Nordstrom's and help me buy a suit. And I learned how to ride the bus from Fremont to downtown. And they gave me a little cubicle down there. And to make a long story short, over 3 years, I collected about $100 million back to the bank. And I worked on properties from Texas all the way through Alaska, west of the Rockies. And I got to work on properties, every kind of property imaginable. And at any one time, I had 50 or 60 accounts that I was working with.
Wow.
And included, mid-rise office towers, marinas, apple packing plants, subdivisions, industrial parks, whatever. And I worked with some of the best real estate legal talent and accounting talent was available in the area at the time. And I learned a lot from them. After that, after 3 years, I started, I guess what you call today a gig worker type of career. I was involved with Lehman Brothers and Goldman Sachs, and I was buying and selling as a principal and as a consultant, both performing and non-performing loan portfolios and bank mergers and acquisitions. And I did that in North America and Europe for about 5 years. Got sick of traveling, hated it, and came back, bought my little house in Port Orchard where I live now. And because I didn't know what else to do, I got a real estate license and started brokering real estate, which you would think, with that kind of background, I might have had some knowledge about the business, but I really didn't. And it took me 3 years of really suffering to learn the business enough to where I could kind of make a go of it. And I did pretty well up until the next real estate recession.
Those recessions, they come out of nowhere and they bite you.
Keep going, yeah. I call them exogenous variables. But I was, I did 1 year, I think I sold $40 million in sales.
Wow.
And it's kind of bumped along since then. So every recession, I roll out my old dusty Rolodex. You know what a Rolodex is?
I know what it is. I don't have one, but I do know what it is.
It's a database on little cards and a little thing that rolls around.
Old school database.
Yeah. And so I drag that out periodically when I trying to think of what to do. And I decided in 2009, 2010 that I'd become an REO broker. And that's pretty much what I've been doing since then.
Perfect. So I'm gonna jump in here because it sounds like we're up to modern day. So you were just going to get into it. So right now, what is your main bread and butter for your business? You're in foreclosures, REO business. So give us a little, overview of what it is that you do, today.
Okay, well, I'm what's called a local listing broker, and I list and sell properties for asset managers that represent owners of defaulted properties. That includes the Department of Housing and Urban Development, Chase Bank, uh, Zome Network, which is Mr. Cooper and Nation Star. And so my job is to really to list and sell, but I also do, it involves a fair amount of valuation, inspection, reporting, that sort of thing. So I'm the eyes and ears on the ground for somebody, wherever they are, that owns large portfolios. So HUD, for instance, will sell this year, will probably sell close to 10,000 properties across the United States and U.S. territories.
Wow.
So in any time, whether it's good or bad for seller's market, there's always foreclosures. There's always short sales, which I do a fair number of. And so my job is to figure out what they're worth, given the constraints, the factors that the asset managers tell me to look for. And then I have to document everything, and I have to prove. It's like going to court every time you take a listing. You got to battle out with people who are reviewing your BPOs. And there's always a certain dynamic tension that exists in trying to determine what the value is. But here's the good news about REO sellers. They don't care. It's not their money. But they are very smart, very sophisticated people, most of them that I've worked for. I'd say all of them. And, they have a point of view, but their point of view is informed by big data, by analytics and trends. They're very, very close watchers of data. They use it very effectively. And so, buying REO properties is not so much like sitting down and arm wrestling and negotiation. It's understanding market trends and, rehabilitation values, after repair values, all that. And if you were asking me to make an offer for you on an REO property, what I would tell you is you do it your way. You figure out what your game is, and it's all about you. It's not about the seller, whoever they are. And so be consistent in what you do. Be true to what your strategy is and your tactics. And be true to yourself. And always make your offers, on that basis. But try to understand who the seller is and how they work. And the better understanding you can develop about the seller and how they work, the more successful you will be eventually in buying those types of properties.
Perfect. So kind of take us in. Not everybody is or has experience with foreclosures. And so can you kind of take us, give us an outline, the difference between REO, foreclosures, and short sales? What separates those three terms? Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
All right, I think it probably begins, I would say, even before a borrower, an owner of a property with a mortgage, gets into trouble. They might miss a couple of payments. They might be in contact with their lender to try to arrange for forbearance, and so that's kind of the genesis of it. And if that individual cannot find a resolution to their income problem, which is what their central problem is, then they have a series of things in Washington State. It's a state by state affair. So different states have different rules and regulations regarding the process. The state of Washington, what's called the non-judicial foreclosure process begins with a notice of default issued by the servicing lender to the defaulted borrower. And approximately 5.5, 6 months from there is the shortest time that the lender or the servicing lender can arrange for what's called a trustee sale or a short sale, either one of those. Trustee sale or sheriff sale. And what that means is literally an employee or a contractor hired by the trustee that's conducting the legal affairs goes to the courthouse steps, King County, Kitsap County, whichever county it is. Different counties actually have different procedures. In Kitsap County, it's usually on Fridays in the morning. And this person has a bunch of files in their possession. They stand around in the lobby at the courthouse and they yell out, "I'm here for the trustee sale of such and such. Does anybody want to bid?" It's an open outcry auction. And
I love it.
And if you wish to bid on that property, you can do so, but it's a verbal bid. If your bid is accepted, you have to put up a 5% cash deposit, non-refundable, and bring the rest of the cash within 72 hours. And you get what's called a trustee's deed or a sheriff's sale deed, which has very few protections, if any, for the buyer. So it's pretty much a quitclaim deed that says, we're conveying our interest to you, but buyer beware. So that's a very short description of the foreclosure process. REO properties are properties that have already been foreclosed on. They are properties where no third party wanted to purchase the property at the auction, the open cry auction at the courthouse steps, and the default bidder is always the lender, and they bid the amount that's owed them. So that's the default amount. And from there, a lot of people are under the misimpression that you can just contact banks and ask them to sell the property to you. It doesn't work that way anymore. Maybe back, when I first started in the 1970s, it did. But right now, most loans, of course, are sold in the secondary mortgage market. So they have bondholder interests and restrictions and indentures. And there's a servicing lender, and there's the owner of the debt, and then there's bondholders. So there's a whole chain of servicing and ownership of that debt to where nobody's directly responsible for it. But people who are in charge of resolving that debt hire asset managers to manage the properties. And they look first to those asset managers to provide valuation and services and insight as to how to market that property and what they can expect. And only when it's gone through that process and through a legal process to guarantee that they have marketable title do they offer the property on the market. Now, they can offer that property many, many different ways. Most desirable for most owners of large numbers of defaulted debt is they want to do what are called bulk sales. So they'll call up, Goldman Sachs or Wall Street firm or people they know who are well capitalized, well funded, and they will say, we've got a portfolio here of non-performing loans or REO properties. Would you like to make an offer on them? That's what I did back in the 80s, mid 80s for Lehman Brothers and Goldman Sachs. And so very often their preferred choice, if they could get enough, is to sell these defaulted properties in bulk to an investor. And then there are certain covenants which those investors must agree to, usually regulations, federal regulations, state regulations. And then they buy them and they do whatever they want with them, which may be renting them. It could be just reselling them. It could be adding value and reselling, whatever that investor chooses to do. The interesting thing for smaller investors is if you can find a way to network with those bulk purchasers, very often they want to subcontract to local investors. Let's say they're buying a portfolio on the West Coast, all the states on the West Coast. They want to find more local investors in each state to take a portion of it.
Gotcha. Okay. So I'm going to, I'm
Sorry.
going to try my best to try to summarize everything that you just said. And so stop me when I'm wrong and correct me. So we have the three terms. We got REO, foreclosure, and short sale. The foreclosure is the process of somebody stopping paying on their loan, and the bank selling that, and you would go to the actual, the courthouse steps in order to buy that. If nobody buys it on the courthouse steps, if nobody actually, decides that it's a valuable property, then it becomes an REO property. It's owned by the bank. And so where does short sale come into that? When does it become a short sale?
Yeah, a short sale is an option for a defaulted borrower prior to a trustee's sale.
Okay.
Actually, in the state of Washington, they have a number of options. I'll explain that one in more detail, but the state of Washington in circa 2010 passed a new law that was the Homeowners Protection Act, I think it was called. And it requires servicing lenders to appoint a single point of contact to a borrower and be an authority, somebody that can sign. And if that defaulted borrower requests arbitration. And so you can request arbitration of that loan. And a number of people did that. And not all of them worked out, but some people saved their homes by, getting some kind of a workout on being able to repay it. Another option is bankruptcy, but a pretty good option, and one that's most used, that's most beneficial actually for the defaulted borrower, is what's called a short sale. And so they engage the servicing lender. It's most beneficial to the borrower if they can hire legal counsel to help them. There are also free HUD-approved housing counselors that you can talk to who will help you somewhat with the process. And brokers, of course, can do this. But you want to engage the lender. You want some time. You want to request some time to sell the property or whatever you can get for it. And when you get an offer, you present that offer to the asset manager that's working for the lender. And very often in a short sale, the net sales proceeds of that offer are less than the total amount owed. That's why it's called a short sale. It's short the amount to pay off the loan in full. And depending on their models, on their economic models that they use to evaluate, they may accept that because they determine that short sales, and actually the data was pretty clear in the 2010 era that lenders are very often came out to better advantage by doing a short sale than going through the foreclosure process.
Interesting. Okay.
So they have an incentive to do that.
Okay. So for any of the investors that are listening or watching to the show, if they want to start getting involved in buying foreclosed or short sale properties or REO properties, what's the best way to go about getting in front of those properties? I know you said for foreclosures, you got to go to the courthouse. That's how you buy them. And there's also like auction.com, et cetera, but you actually buy them by bidding on the at the courthouse steps. So what are the other ways that people can go about buying REO, short sale, and foreclosed properties?
Well, I would say most of the time, probably 97% plus of the time, those properties are listed with brokers.
Okay.
So unfortunately, for people who like to deal, directly, the best path is through the MLS and certain websites. So that's really the first step. It's not hard to find them, and if you're working with a broker that knows how to do it, you can get them to set you up in an automatic notification process for new listings like that. All that said, those pickings have been pretty slim for the last, since 2013 when home prices began rising in Western Washington. However, everybody's sort of anticipating a return to the bad old days of people losing their homes, which doesn't make me happy. Yeah. But it does provide more inventory for people who are looking to purchase.
Yep. Okay. We keep this episode or these podcasts about 20 to 30 minutes. So we're kind of nearing the end of our show here. But before we move on from your, how you deal, your specific business, kind of tell us you mentioned earlier that one of your jobs was to figure out the worth of the properties. Just give us a real brief overview. Like, what is the process that banks use to identify the worth of the property when they go into foreclosure?
Any and all of the options available. So the HUD, for instance, will commission an FHA appraisal of the property. They will use automated valuation models. They will use BPOs or brokers' price opinions, and they might get several of those for a single property. And that process is ongoing. It doesn't stop at the listing period. If they list a property and it's not selling, they continuously go through a valuation process trying to determine the right price.
Gotcha. Okay. All right, we're going to shift gears here just a little bit. We've covered the nuts and bolts of your business, what you do. You're a broker. You deal a lot with foreclosures, REO, short sale properties. So now kind of take us, I want to hear a little bit more about the experiences. More than anybody else, real estate it's a roller coaster, both financially and emotionally. You got your ups, you got your downs. It seems like you've seen both the ups and the downs. So kind of take us to one of the lower parts, maybe that the condos that you dealt with, and what was the best lesson that you learned from that experience?
I sort of thought you might ask me that question, and the more I do, the longer I stay in this business, it seems the less I know. But the what I would say about it is, it's all up here. It's all up here. And the good news,
pointing to the head. Yep.
Pointing to the head. And the good news about the real estate business is it's so big and so diverse, and everybody needs a place to live. Most businesses need a domicile to operate their business. So there's always a demand for property. And there are many, many things, professional services or ways to invest. You can buy equity, you can buy debt, you can syndicate, you can be a sole proprietor. There are all sorts of ways to approach it. So if whatever you're doing isn't working at the moment, take a little time, just a little time, not too long, and sort out the head stuff and sort out your options, and then go do it. Go do it. I had the privilege. I was at a reception one time held by Seafirst Mortgage Corporation, and a gentleman by the name of Martin Seelig was there. And maybe you don't know Martin, but he was responsible for building most of the high-rise office towers in downtown Seattle.
Oh, wow.
He built the Columbia Center, for instance, which is where I was in office there. But so I got a chance to meet him. My loan officer at Seafirst Mortgage Corporation wanted me to meet him, and he introduced me. And I was just a little scumbag developer. I still strap the tools on and would go out and work on my projects. But, Martin was kind enough to talk to me for a minute. And I walked up to him, shook hands, and he said this to me: "Son, whatever it is, just do it." And that was the total sum of our conversation. And
wise words.
Well, really, it's simple, but that was his life. That's how he got things done and achieved things. And I'm sure that any person who achieves something starts with nothing, and they have to challenge themselves. They have to go above and beyond their own comfort zones and what they know at the time. I certainly knew nothing about what I was doing when I bought that duplex. But you just learn, and you're going to pay a price. You're going to pay a price, and you can be a little bit more careful and whatever, maybe not suffer like I've suffered. But it's not just about making money. It's about learning. It's about service. It's becoming a servant leader. It's giving people opportunities to be better than what they are. I
like it. Just do it. It just sums it up so well. Very, very, very short and to the point.
Mm-hmm.
So you got started. We're going to close it out here with one last question before I ask how people can get in contact with you. So you started out in 1975. This was the Jim, just doing one single duplex. If you could go back to that guy and just give him one piece of advice, kind of like Martin had given you, what would be that piece of advice be?
Good question. I don't know that I have a good answer to it. I'm still learning, and I still don't know enough. And so I'm challenging myself every day with new initiatives, things that tweaks, or even major initiatives that are changing what I do on a daily basis and how I operate. Uh, so I guess I would say keep up the good work, keep moving.
I like it. I like it. Just do it.
Just do it.
All right. Well, Jim, thank you very much for jumping on here and sharing your wisdom. I'm sure I can speak for everybody listening and watching that we appreciate you sharing everything that you've given us so far. So, I mean, you need things too. So what is it that somebody could bring you that you would want?
I'm just thank you very much for the opportunity to speak with you and whoever's going to be watching this. But I'm all about networking. So if somebody has an idea or a question, I'll be happy to talk to them. No cost, no obligation. And I have a pretty good network of very highly professional, caring people, and we share, a commitment to respect and transparency and honesty. And if you're that type of person, and you just want to talk to me and see if there's something we can do together, get a hold of me.
Awesome. And if somebody wanted to get a hold of you, what would be the best way for them to reach out to you?
They can certainly email me, I guess. Jim Freeman, JimFreeman, @jimfreeman.com.
Jim Freeman, JimFreeman @jimfreeman.com. All right, there you heard it. So again, thank you for coming on, and everybody listening and watching, we'll look forward to seeing you guys on the next episode. Thank you for joining us on the Real Estate Investing Club. If you feel we provided value, we would appreciate it if you hit that thumbs up, share it with your friends online, whatever it may be. If you'd like to share or partner with us on an investment deal, we are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.